Today, my remarks will be shorter, my focus narrower, and my message more direct. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Today, few hours back, Fed Chairman Jerome Powell at his Jackson Hole speech mentioned that there is clearly a job to do. Powell clearly mentioned that Fed could keep lifting rates sharply for some time, and the US market started correcting after his speech. Even SGX Nifty, from where our markets take an indication to start trading for the next trading day, has also fallen more than 200 points. Now many traders will build their trade citing these points and might not even understand the wider perspective. I have seen so many traders getting stuck in a trade just because he or she acted on a news without understanding the wider perspective. By following economic calendars that are publicly available, you could be aware of any scheduled event, and if you have good understanding of the basics, you know whether it's bullish or bearish. Welcome back to Options Decoded. I know you will say that I am not an economist. It's not my job or it's too tough for me to understand. But frankly speaking, it's easy to understand than making your hard-earned money go away to someone else's pocket. With this and upcoming videos, I would like to share how you can be aware of basics on macros so that when next time news pops up, you know how to react. Okay, few of you will say that price movement discounts everything. If news is bad, market will fall and I will take a trade accordingly. That's right. That's the way most of the traders take a position. For example, a bad news comes. They know that it is bad for markets and already the markets have started reacting to it. They exit their portfolio or enter a fresh short trade, and then they see some small profits on their screen. They are happy and they decide the price where they will exit the trade. But suddenly it reverses and they are stuck with a losing trade. It happened recently when Russia invaded Ukraine. Global markets started falling. Social media and news channels anticipated even the Third World War. But within few trading sessions, markets bounced back, right? Don't you think many retail traders would have lost their money after that news? This is how things actually work. Few weeks back, when markets were below 15,500 Nifty levels, no one was telling you to buy. Rather, there was China-Taiwan news, there was upcoming recession news, there was news of high inflation in US and Europe, and media asked you to go short there. But what happened? Markets went closer to 15,200 levels and now we are at 17,500 levels in roughly 2 months time frame. I understand how these things work. That's why I covered most of my trades below 15,500 levels and shared that even on my Telegram group. From there, I went long. I expected 100 DMA to be the reversal. But as we all know, Mr. Market knows everything. We even crossed 100 DMA and now trading much above those levels. We all agree, no one can time the market. Similarly, no one can catch highs and lows always. You can be lucky once or twice, but not always. So, let's get back to our topic. How to analyze the macroeconomics part and take a better informative trade. I won't say that after watching my videos you'll be an expert, but surely you will be able to take a better trade and your anxiety level will also come down. In this video, briefly I would like to analyze China's stimulus package, about which no one is talking right now. I can cover more on other topics like US recession and inflation and its impact on India, or the increase in FIA's buying numbers in Indian market, Chinese real estate bubble, European high inflation, bond prices fluctuation especially in few European countries, our deficit or impact of fuel etc. But I know कि एक वीडियो में सब कुछ भरने की कोशिश करूँगा तो बाउंसर हो जाएगा. So to stay updated, make sure you subscribe to the channel and put that notification button on, and please like the video so that it reaches to more number of people. So when everyone is enlightened with US recession and high inflation globally, what about ignoring China? Couple of days back, China announced stimulus package of 1 trillion yuan, that's equivalent to $146 billion. Now typically when such news comes, Chinese market should have reacted positively and after a couple of days, still they are trading flat. Why so? We all have heard that Chinese economy is on fire right now thanks to Chinese real estate markets, which is accused of running massive Ponzi schemes of over $9.2 trillion. As a trader, we should be aware that real estate contributes roughly 29% of China's GDP. So far, the demand of housing has dropped by 16.9%, which is at lowest level since 2016. And not just that, home sales have fallen by 25%. We all know that last year, one of the biggest real estate developer, Evergrande, defaulted on its payment. On top of it, China is following no tolerance policy against COVID, all creating a big impact on their economy. So this stimulus was much needed to stay afloat. You need to understand that typically in India, you get a loan from a bank of roughly 80 to 90% of property value. Even the loan amount is not more than 4 to 5 times of your annual salary. But the same in China is closer to 20 to 25 times of your annual salary. So you can understand how inflated the prices of real estate can be. So now you can also understand that when developers start defaulting, what will happen to the banks as whole real estate goes for a toss. That's why this is even being called as a Lehman Brothers movement of China. So with this stimulus, they are able to buy more time. Okay? Now if some similar news comes from China, you know how to think about it. Now be ready and prepared with open mind for what you are about to learn in coming days. To get the timely access, make sure that you are subscribed to the channel and that notification button is on so that you don't miss the updates. Till next video, as always, happy learning.